So, Chris,
there you go. So,
why are we here today?
Why are we here
Welcome.
today? Well, welcome to the inaugural edition of the Money Matters podcast.
Why did we decide to do one of these, Chris?
Well, we decided to do this because there were questions that weren't being answered when we were taking our listeners' calls online.
Yep.
On the radio on Saturdays. So we decided to open up this format and hopefully encourage folks to write in with their questions.
Exactly. And there's also the situation where we get questions asked by our clients throughout the week, and some of them are pretty good, and we thought, I bet a lot of our clients also have those questions.
Well, that's right. It's kind of like a classroom, Gary, when, the teacher says, hey, if one person's got the question, raise their hand, probably 10 others do too. And I think that probably holds true with our clients and prospective clients out there who might be questioning the same things.
Exactly. So we're going to have an email address later on in the show where you can submit your questions, and we will answer those in the next podcast.
There you go. That's
so
exactly
let's get started.
So
you want to start or you want me to?
Well, let's jump in. The first question we have is, my wife and I are still working and have begun collecting Social Security. I understand our benefits won't be taxed for a few years. Is this correct? That comes from Steve over in Oldsmar, all the way from Oldsmar. So
where is Oldsmar?
Oldsmar
is the coast?
Oldsmar is north of Tampa.
Okay.
So north of Tampa. So west
coast
of Florida.
Coast. Well, anyway, so this is an interesting question, and this is I'll start out in answering it in the sense that oftentimes we hear things in the media that aren't correct.
Yes.
Now we do know there's
they're halfway correct.
Right. Sometimes they'll call it a credit in the media instead of a deduction.
Yeah.
So what's the difference between a credit and a deduction?
Well, a credit and a deduction. So we're going to begin answering the question here. A credit is money that you can generally get back. It's a credit against taxes paid, whereas a deduction reduces your taxable income. So a deduction is something, if I've got $100 of income and I get a $20 deduction, my income is now $80.
Exactly.
Versus a $20 credit, if I had $100 of income and my taxes were $20,
you don't
the
know
credit
taxes.
Would go against. I owe nothing.
Exactly.
That's exactly right.
So this new senior deduction is supposed to help alleviate the tax on Social Security. Now
that's how it was presented.
That's how it was presented. Now,
so this is part of the. Let's take a step back. This is part of the One Big Beautiful Bill Act.
Yes.
Right. And so tell us, what...
So initially, I think the current administration wanted to not tax Social Security.
Yes.
And probably as the political process goes, they realized, oops, it's going to cut out a lot of tax revenue. We can't quite
afford
do
to
that.
That's right.
So then it got back to, well, let's give people a deduction which will help a little bit. And they arrived at a deduction of $6,000 per person over the age of 65.
Yes.
And it's only good for how many years?
Well, it's good until 2028.
Right.
So we've got
25, 6, 7, 8. We've got 4 years.
Basically while Trump's in office.
Yep.
So, so it's good for that. And it begins to be phased out at $150,000 of income.
That's right. And it's 6% of the amount above $150,000. So when you get to $250,000,
it's completely gone.
Yeah, it's completely gone. Depending on what your income is, you may or may not get this new senior deduction.
That's right.
So we would answer Steve in Oldsmar and saying that yes, you're beginning to collect Social Security, assuming you're below that $150,000 threshold, assuming you file married filing joint. You will have a new deduction again as long as you're below the 150. So it will help. It's not really related to not taxing Social Security. I would just view it as another deduction altogether.
Yeah, that's right. I think, it is important to point out that Social Security, no one pays tax, even Warren Buffett, on 100% of their Social Security, right? So the most...
100% of their income. Right.
Well, but everyone, I guess what I'm trying to say is that everyone pays tax on some portion. Well, that's not true either. Everyone doesn't pay tax on some portion of your Social Security, but on the higher income earners, the most that they would have to pay tax on is 85% of their Social Security, right?
Right.
So in other words, if someone gets $100 in Social Security and they're in the highest bracket as far as Social Security determination, they would pay tax on $85, not the $100. So it's still, a portion of it is still not taxed.
Correct. Yes.
But so that remains the same. I think that's the big takeaway. That remains the same. And going forward, this additional deduction that we're talking about as part of the OBBBA is an additional $6,000 per spouse. So married filing joint, that's $12,000 potentially.
Right.
In addition to the standard deduction, which is what, $31,000?
A little more. Index for inflation keeps going up. Yep.
Keeps going up, and then there's another deduction for folks 65 and over. So,
Yep.
so I think that the number is somewhere along the lines, Gary, at 47,000
Yeah.
something that you cannot pay tax on, income that you cannot pay tax. So that's a pretty big deal.
It is a big deal.
Pretty big deal.
It is.
So for Steve, who asked the question, saying his benefits won't be taxed for a few years, what would you say?
I'd say it depends on your income. Likely your Social Security will be taxed, but you will get this extra deduction of $12,000, provided your income is below $150,000.
That's right.
All right, let's move to the next question. You want to read it out loud for us?